Indeed. Now, before the show opening, we mentioned we're going to have a little discussion about education this morning, particularly preparing young people for life and some of the things that hit them between the eyes. And they are things like interest rates and saving and compound interest and stuff like that. And I've found from first-hand experience working in a bank that there's a hell of a lot that come out and know nothing. And Chris Foster-Ramsay is a regular on this show. He's identified it as a problem in the industry. Chris, good morning and welcome.
Good morning.
Good to have you back. Interesting discussion. We always have different discussion types. This one popped up when I noticed a media release, and it's been a bit of a bugbear of mine from a while ago, and I certainly remember doing stuff at school when I was a kid, but it doesn't seem to be that it's necessarily part of the curriculum these days. Have you identified that as well?
Yeah, absolutely. We have. We've seen some data come through, and it's certainly interesting data. What it basically says is that, life skills around, cooking and maintaining your house and getting a job and just running your life as normal, they seem to be covered by the curriculum, perhaps at the expense of advanced financial education concepts such as saving and how to manage bills, what a credit report is, what a loan application is, what interest is, as you said before, what compound interest is. So there are a whole lot of things there that perhaps are lacking, and we're certainly seeing that come through in some data we're seeing from us from Money Smart website.
From the position you're in, we're talking this morning about the housing industry and how there's a lot of different industries involved in it, but it's in a state of nothing short of crisis at the moment. We have a lot of talking about it, but not much action. In your industry, has this been identified as a problem for a while, and again through education systems just being greeted with lip service, or is it really only recently that you and the industry in general have started to say, well, hang on a minute, we need to fix this?
Oh no, it's been going on for a long time. We've had everyone from government to peak bodies to lobbyists, at a high level, from what I understand, raise the subject with educators, and it's something that they seem to acknowledge is required. But to this point, I think they're still seeing, whether it's generational or not, I don't know. But we may see the next generation coming through being a little bit better at it. But there's certainly a divide between those that are looking to buy homes now, and a couple of generations ahead of those, particularly the millennial generation versus the baby boomer generation, as an example.
We identified this morning some of the doors that need to be wrapped on to make a change in the housing industry and get the right people to the table. In this particular case, does it just go straight to the federal education minister, or is there other state bodies all the way down the line that we can go and start asking for change at least?
Yeah, I think it probably starts with the bottom layer. I think that it's all nice and good and well to knock on the doors of federal ministers and state ministers, but I think it needs to there needs to be a real case built by not only my industry, and I'm certainly one person in a very big industry. But I think it needs to be a grassroots push rather than with demonstrated evidence such as we have here, rather than a knock on a minister's door saying it'd be good to add this to the curriculum. So I mean, look, that's my personal view. Others may differ, but certainly that's my view on how it works.
A few weeks ago, we actually had the vice principal of a local school come in and talk about the fact that they are starting their own curriculum, if you like, without putting words in the mouth, but they've identified a lot of social issues that they don't believe are part of the state government curriculum, and they've said, righto, they're important to us, and we're going to do some tests, and have basically written their own. And I imagine within that there would be issues like this that are missed generally, and they're going to pop them in and have them part of it. Is it almost down to that individual schools may note it as an issue and add it?
Yeah, well, firstly, I would say bravo to that principal and here, because being that is an immensely brave move, and I think that if young people can benefit from that type of approach to education, they'd be far better off for it. I guess in relation to the notion of financial education in the curriculum, I think that it comes down to the ability for a school to want to deliver that, and then reach out to different industries such as mine. And like for example, there's a 30-minute presentation that any member of my peak body can roll out to a school on a whim. Like it's there ready to go. It just needs to be invited in to present. So I wouldn't say that it's not been thought of, but I would say that it's something that's definitely missing from the curriculum.
Yeah. Harley Mackenzie here. I had an involvement with a school when I was living in the Macedon Ranges, which very much went down the route of, it's now called Global Village Learning, I think. Very much not focused on university entrance. It's more for people who are children who want to learn life skills. They very much, the whole model of the school is that they have to run businesses. They are employed by the school to clean. Some kids are employed by the school to clean it. They're encouraged to, some guy, they help finance a barista, so the school's got a local barista and everything, and they're taking a very pragmatic view about education. It's very much modelled. The headmaster there is Peter Hutton. He's been involved with the Finnish model of education. That's one of them. I can't remember his name, who was part of that, is part on their board, so from overseas. And they've changed the whole focus of that education being from a factory pumping out university students, which is a model that people need and has to be available, but they're providing a very much alternative about life skills, finance, entrepreneurship, and all those things. And the children actually can put up a business case, and they've had finance to do various projects. So there is that model available. I'm not sure it's a very common model. I suppose you'd classify that as a private school, but it's not very expensive private school, so they're very much. So there is those models of education that sort of try and cater for life skills as opposed to university entrance. My only concern is when we talk about fixing societal ills, especially education ills, schools are one prong in the attack, but it's a very long, delayed prong. If you educate your children in a school now, let's say they're 15, 16-year-olds, by the time they're earning income and everything, we're talking 5, 10 years or more down the track. What do you think we can do to raise the financial literacy of our general population, which I agree is very low at the moment, especially among the younger adults sort of region?
Yeah, it's an interesting question, isn't it? So I think that it comes down to perhaps overlaying this stuff at a younger level in terms of primary school and developing out the basic money lessons they receive. I guess in relation to the general population, I think that you're right in that it's very much a self-serve model, in that if you want to research something, you go off and research it. I don't have an immediate answer about how to sort of deal with that. Would be an interesting discussion point, I think, over a long period of time. But I would say nonetheless that it's not just education at a primary, secondary, or tertiary level that perhaps needs some development here. It is absolutely financial education in younger adults and those older as well. And everything from buying a home, and a millennial buying a home who hasn't perhaps received this education the whole way through, right through to someone that's getting ready to retire that has undergone a relationship split over the years, and the former party did all the money, so looked after all the money and the finance and the planning. So you've got a real life scope there of fundamentally the same issue, but spread over 80 or 90 years of age. So it is definitely a point that needs development, I think, in my view, across a number of agencies and a number of stakeholders.
Well, we'll add it to our list to change the building industry. We'll fix this as well as we go down the path. But Chris, while I've got you here, let's have a view of housing market, which you're involved in. We had an interesting non-dropping of interest rates, which was viewed very critically in some quarters at the last Reserve Bank discussion. The state of the industry at the moment, we know that there's not a lot of product available, but do we have a situation where it's a good or bad time for a youngster to be thinking about getting into a house?
Yeah, I think that, as we've come to sort of observe in the last sort of 4 or 5 years, that the time to buy is when you're ready and when you've got the money to be ready and, are willing to commit to not only a home in an area, but, there's other ways too, especially if you're buying with someone else. So I think, that's all come to the fore in the last, couple of years. I think that over and above that, in terms of, availability of funding for building and renovation, house and land, that sort of thing, I think that's all ready to go. It's just a matter of a proper government plan coming together. We've seen one major bank move. Previously, they were very much not in favour of the pre-built off-site, homes that are transported to site and fixed to site at site. They've had a 180 on that position and are now very much in favour of it because they see the advantages to building that type of home quickly. So I think that, there are a whole lot of moving parts here, and I would say en masse that, and very much in my own view, that most of the lending industry and my peers and I are ready for that to come. We're just waiting on one part of government to confirm how that infrastructure and building time frame, whatever you want to call it, is due to be rolled out. So I hope that would sort of keep on theme with what else you've been hearing today, but that's certainly my view and my observation.
Chris, one of the things that's relatively new to the housing market is the bank of mum and dad. It's been around in some form for a long time, but I think it's talked about more and utilised more. But one of the issues with it, of course, is the difficulty with paperwork, legalities behind the scenes, transfer of asset, all of that sort of stuff. Are we legislating better, or you as an industry getting better at managing a situation where a parent has a deposit but really needs to have that asset transferred into their children's names in a quick and easy method to speed up this process? Yeah,
I think that we're probably not seeing that part of it, Rob. I think we're seeing that more that, that the industry is becoming more au fait with how to correctly set up those loan structures in terms of the bank's mum and dad. The asset transfer and the wealth transfer, that sort of comes later on from what I see. Sort of what it doesn't, cross my desk as much. It's more that, there's a shared equity arrangement between the bank's mum and dad and the person buying the home. And then the way that it should be structured, in my view, is that, that the person buying the home, the child or sibling or whatever it is, buying the home should have an 80% loan against that property. There's, the second loan being a second loan being set up to link into the bank of mum and dad and the equity and the shared security of that home, and it is the borrower's, the child or whoever, it's their role to try and pay that down as fast as possible, that second loan, to allow the parents to take that property back and for that deal to be done. The bank of mum and dad should never be a long-term, over about sort of 5-year commitment from the way we see things. It just doesn't need to be.
Yeah, well, I was thinking this is one of those situations where, with all good intention, we've seen it with superannuation and we've seen it with negative gearing to get mum and dad investors in to inject, but it seems that now it's completely taken over by entities that don't necessarily need the support to get into the industry, and it's now clogged up and probably causing a lot more problem than it originally set out to do. And this one, potentially, is another one of those that could have the right starting out point to assist younger people who couldn't afford to get into a house normally to get into it quickly and easily, but it could also be gobbled up by other parts of the financial world for not necessarily the right reasons.
Oh, for sure. There's that risk as well, and that's why, anyone that we speak to that comes through for a bank of mum and dad type loan, we really have a very detailed meeting with both parties, all parties involved, and explain the structure and explain the importance of doing things a particular way. And then, from a lender's point of view, and certainly we don't object to it from their point of view either, is independent legal and financial advice for the guarantors, which is really important. Many will say, I don't need that, but as you say there, it is an industry and a sector that is open to potential, a small number of people really for everyone. And I think that, by having the right checks and balances at the start, the people that really want to do it for the right reasons don't mind, approving those checks and balances. So I think you're absolutely right in your contention there.
Chris, in closing off, it's a while since we've spoken to you. We're sort of a mixture of optimism and pessimism about where things were going. How are you feeling now about, we've had a few months now of a new government. Is there anything now to get you a little bit more excited we're heading, excuse me, in the right direction?
I think we're all excited for, the middle of August and potentially another rate cut. Nobody in the industry or banking quite knows what happened last month with the RBA's decision. But look, it is what it is, and I think that as things start to move the right way, I think the balancing act will be between cutting rates to a point and not overcutting to ensure they go back up again quickly. But we're seeing about 90%, certainly data, CBA and NAB data is supporting this in terms of what we're hearing. 90% of those with a home loan have kept their repayments as they were 6 months ago, and then haven't elected to drop them by the RBA's standard drops. They've just kept their repayments the same. And part of that might be they want to preempt anything coming and make sure that that's not a shock to the family budget, but they may also just want to get ahead and get a bit of a savings buffer in their home loan as redraw, etc. So
that's a very positive way to finish, actually, because we were talking about financial literacy, and that's probably some really, really good decision making by a lot of younger people to say, well, this is a chance for us to get ahead quickly. We've learned how to live in this space. Let's stay in this space and get our loan down quicker. So that in itself is a positive.
Oh, for sure it is, absolutely, yes.
Chris, thank you so much for your time. Really appreciate it. We'll catch up with you again some other time when, maybe after next interest rate cut and see what happens in that space. Appreciate your time this morning.
Sounds great. Thanks very much.